this month's educational focus is create the life you want and don't settle. So I'm going to be talking about 4 points. I actually just realized today that December has 5 Sundays in this month, so I'll add a 5th point on next week. But the first 4 points, and I'm only going to talk about the first point today, but the 4 points that I'm going to talk about are minimize your taxes, generate business income, debt elimination, and asset accumulation. So, looks like we're having technical difficulties with my PowerPoint. But for minimizing taxes, I've already done an educational focus on how to maximize your tax refunds. And so basically with maximizing your tax refunds, that is minimizing the taxes that you pay. So today I want to talk about a new point that could possibly help you, and that would be correcting your tax withholding. So a lot of times, actually US Today and other news outlets have done articles about how taxpayers are just paying too much out of their paychecks every week or 2 weeks in taxes, and this is money that could be going back into your pocket, going into your savings, or helping out around the house. And then a lot of times when it comes to tax season, we mismanage our money. So a way that you can make sure that you are not paying too much out of your paycheck is by correcting your W-4. So the IRS has a W-4 calculator located on their website for you to go through and make sure you are not paying too much. I have an example. Okay, I'll just skip through that. But basically, to find the IRS calculator, you go to google.com and you type in W-4 calculator IRS. And you'll get some options, and it will say 2018 W-4 calculator. You click the link, and there are about 6 questions or 6 pages of questions for you to answer. And at the end, they will give you the results and let you know basically your projected taxes that you're paying based on how you answered. And then they will also give you an example or a recommendation of exemptions to actually take.
Are you going to be taking that?
And lower the taxes that you pay out of your check, and that will be more money in your pocket. So almost like a little pay raise that you can take for yourself. So while we're getting the PowerPoint up and running with my example, I'll skip down, and I also want to touch on the point of know your deductions. Know what you are eligible for. If you have kids, you know that you're eligible for a child tax credit. So you want to take advantage of it. Also, if you do not have a W-2, but you have kids, you can still apply and get a credit. It won't be as much because you haven't worked, you don't get the earned income credit, but you can still, you are supporting your family somehow. If you're doing hair, if you're catering, if you are babysitting, whatever it is you're doing to support your family, that is a way to still benefit from the tax credit. So maybe you won't get the $6,000 that your neighbor got because they have a job, but you can still get $3,000 or $2,000. So be aware of the credits and deductions that you can take. Your tithes are deductible. Your charitable contributions, tithes, offering, harvest, anything that you're giving to the church, anything that you're donating, that is deductible. Not only do you need to be aware of the deductions, but also you need to have good tax record keeping. So if you, for instance, have been on a job search within your field, that is deductible. The miles that you traveled looking for a job, as long as it's in your field, not your first job, but in your field, that is deductible. So you need to be knowledgeable and start calculating these miles. Okay, I drove 5 miles to the Job Corps. I drove 5 miles, or I paid $50 to an agency to make my resume. These are things that are deductible. I own a tax office, as you all know, Easy Selling Tax Services. We're located at 1264 8th Street, Daytona Beach, Florida. But actually, I can do taxes wherever there's Wi-Fi and I have my laptop. So I am mobile if you need a consultation or advice. I've had my tax office since tax season of 2014, so this will be my 5th year. Okay, so I have my example pretty much that I can see. I guess no one else can see it. If you want to turn, if that's not too much for you. So I have the example family. We're going to call them the Johnson family. And so they're going to be married filing jointly. Okay, so together they make $100,000. That's their income. The husband makes $45,000. The wife makes $55,000. They have two dependents, and they expect to pay $4,800 a year in child care. So what is child care? Babysitting, daycare, summer camp. These are things that are deductible. Okay, next slide. So like I was saying, this is just a screenshot of Google where you are going to Google and put in W4 Calculator 2018, and it'll be the second one that pops up. And you go ahead and click that, and it will take you to the calculator. So this is going to be the first round of questions. You have your general information. So with the general information, they want to know your filing status. If you're single, married, filing joint return, married, filing separate return, head of household, qualifying widow or widower. If you are not sure about your status, there's actually hyperlinks right on the website that you can click on and to see if this is where you qualify. For instance, if you are you're not head of household just because you support your household. You have to have a qualifying dependent. So if you live alone, no kids, or you're not claiming a dependent, you're not head of household. So you're not eligible for that credit. So you want to file single. Also, qualifying widow or widower, you have your spouse has to have recently died in the past 2 years, and you also have to have a qualifying dependent to qualify as a qualifying widow or widower. If not, you're going to be single. Okay, so in this example, the Johnson family selects married filing joint return. And then the second question asks, can someone claim you as a dependent on his or her tax return? So now that is for someone like, let's say, Ron or Iris. They're in the workforce, but they are still dependents. So when they file their taxes, they are going to put that, yes, someone can claim them on their tax return because their parents are claiming them. Okay, so, but in this case, the Johnson family is going to select no because no one is claiming them. All right, and then next slide. So the next question that's asked is the total number of jobs in which you and your spouse are currently or will be employed. So the Johnson family, each of them have one job, so they're going to put two, because two, husband, wife, 2 jobs. The next the next series of questions are, if your spouse held a job this year but are no longer employed in that job, contribute to a tax-deferred retirement plan, contribute to a cafeteria or other pre-tax plan, or receive a scholarship or fellowship grant that must be included in gross income. So in this example, none of these apply to the Johnson family. So then the next question that they're going to ask you is to enter the number of dependents you will claim on your taxes. The Johnsons have 2 young kids, 2 young children, as you saw in the picture, so they're going to put 2. Then next, they will ask you if you or your spouse are 65 years of age or older or blind. So that does not apply to the Johnson family. So they will leave that blank. Or select no. Okay, and then the next question is child and dependent care credit. So like I was saying, the Johnsons estimate that they'll be paying $44,600 for the year in child care expenses. So if you're sending your kids to daycare or summer camp or any type of care providers, like a babysitter, you have someone who travels to you and watches your kids, this is tax deductible. So you want to, like I said, keep records so that when it's time to file your taxes, you are taking advantage of every credit and every deduction to minimize the taxes that you owe. And then also with this W-4 adjustment, these are minimizing the taxes that you're paying according to the taxes that you will owe. Okay, next slide. All right, and so now they're going to ask you about your income. So you can go to your last paycheck stub for this, or even your last 1040 that you filed with the IRS. You're going to get your adjusted gross income, or you're going to get your year-to-date pay on your pay stub, and that's how you fill this out. You know how much money you've made. So like I said, Mr. Johnson made $45,000, Mrs. Johnson made $55,000, so that is what they will insert into the 2 boxes. There's 2 separate boxes for 2 separate jobs. Okay, and then next slide, please. Non-wage or no-wage income. Non-wage income. So this is income that basically most likely you're keeping track of yourself, as far as if you, like my grandmother was saying, if you don't have a particular job, like an employer where you get a W-2, these are the records that you've kept. And so, for instance, the Johnson family, they started a business, and they expect that business startup to cost $4,150 for that startup. So they're gonna put that into the next question for non-wage income. And also, we have adjustments as well. And these are things like if you contributed to a 401k or retirement, this is deductible. Your contributions to your retirement, your 401k, your IRA, things like that are deductible. Okay, next slide. And then these are itemized deductions. So for a married couple filing jointly, their standard deduction is $24,000. So the IRS already gives you a standard deduction. Now, if you feel that you paid more, that's why it's good to keep good records. If you feel that you paid more of that based on maybe you bought a new car, the sales tax on the home you purchased, if you feel your medical, if you've been sick, if you've been paying a lot of copay, if you feel that you paid more than the standard deduction, then you want to itemize your deductions. Now, in this W-4 calculator, it actually lets you itemize your deductions, and you don't even have to add it all up. You don't have to know offhand if it's more than the standard deduction. It will calculate that for you based on what you input into these boxes. So, but for this instance, example, the Johnson family are going to just take the standard deduction. Okay, next slide. And so after that, you have your results. So, as you can see, maybe not, the IRS calculator has calculated that the Johnson family will owe $3,302 in taxes. That's how much they will owe at the end of the year. And what was withheld from their checks based on how they answered the questions is going to be $10,272 in taxes. So that's an overpayment that they would get of $6,970. So basically they are overpaying every paycheck, and at the end of the year it comes down to $6,970. So with that, the IRS gives you an allowances to adjust. They recommend that the husband redo his W-4 and claim 9 allowances, and the wife redo her W-4 claiming 11 allowances. Now this would make their refund amount drop significantly lower, but it would be $125. But that's $6,000 back into their household, really closer to $7,000 back into their household, where they can put it into a savings account, acquiring interest. You don't get interest off of the money that you pay to the IRS and they give back to you. But you will get interest if you put it into a savings account, if you put it into a retirement account, if you invest it, and I'll talk about all of these things later on. But this is just a way that you can minimize your taxes. Maybe you won't get that tax refund like your neighbor got. But we have to stop looking about our neighbor and think about ourselves. What are we doing with our money? How are we managing our money? Okay, so next slide. So again, I just want to talk about a little bit more of the deductions that you should be aware of and keeping records of. So business expenses, it doesn't have to be a full-time business, it can be a part-time business. If you are using your home to create decorations, if you're in your living room making centerpieces, your mortgage, your rent, your electricity, this is deductible, this is tax deductible. Again, with the job search, travel expenses, placement agencies, resume costs, these are deductible. Your medical expenses up to 7.5% of your AGI, adjusted gross income, they are deductible. If you're a teacher, you get a credit for $250. That is, well, not a credit, but a deduction. So that is taking away some of the taxes that you owe. Also, traveling to work, your business miles, these are deductible. So there are little apps, they're free apps a lot of times that you can get and turn it on when you're going to work, and this is deductible. No. Unless you are basically employed by the church, then it will be deductible. But if you are not employed by the church, no, because that is more like a hobby. I think that's how they would. Okay, and I believe the next one. Yeah, that just talks about more of the standard deduction. So you still want to keep good records, just to know if you're a little bit over the standard deduction, a little bit goes a long way in the tax season. And so again, the educational focus is called Create the Life You Want and Don't Settle. So today we talked about minimizing taxes. Next week we'll go into generating business income. And after that, debt elimination. As, I have a 750 credit plan. If your credit score is not where you want it to be, I have steps to help you get to where you want to be. Now, I'm not a credit repair agency, as in I'm not going to repair your credit for you, but I have the tools, I have the steps that you can take to repair your credit. So we'll talk about those things. And then the last thing we'll talk about, well, not the last thing, but the fourth point we'll talk about is asset accumulation. And that's things like I was telling you, with this more money that you're having every paycheck, now what are you going to do with it? We need to start investing. We need to start saving, budgeting. Sometimes we don't go to the Congress, or we don't travel, or we don't do the things that we want to do because we say, oh, we can't afford it. Well, now I'm putting more money into your pocket so you won't have an excuse. And more money in your pocket, if you use it wisely, it can generate more money. So this is just a success plan and step-by-step tools that you can use to create financial freedom and get to the places that you want to be in your life. Of course, every day we're growing, so each day and each level, we want to get to another level. We're never satisfied, but at least we'll have the tools and the knowledge to keep going and to be comfortable with where we are. Thank you.